Okay, hello everyone, and welcome to this intraday strategy webinar on SB Trade Desk. Mike Boutros here with you. Good morning, Pooja, Petro, Eileen, Chintan, Parmendra, Adrius, the whole crew's in. AV loud and clear. Thank you for that, Petro. Tuttle, great to see you as well, sir. So we've got a lot to talk about, guys. There's a lot of interesting stuff in play. You might have been following the pound pairs that me and Jamie have been writing about. On the swing side of things, pound yen just missing entry, literally by a couple of pips. But guys, we'll take a look at that. The scalp entry was actually right on. The pound dollar as well has been in play. That's from last night. And as always, guys, I want to encourage you to throw out your questions. If there are pairs or instruments that you guys want to trade, you guys want to take a look at, we're at your service. We'll be more than happy to put on some on-the-fly analysis for you. So let's jump right in. A quick overview of what's going on so far, guys. You're looking at the dollar index. This is the Dow Jones FXCM dollar index. Here's the relative performance of the greenback so far today. So you are seeing another stretch higher into that zone that we highlighted yesterday on Daily FX. So 12,049 represents a nice 100% extension from the 2008 lows. I'm sorry, 2011 lows, if I'm not mistaken. Yep, the 2011 lows, so the extension of that entire rally. And it hits right on line with the median line off of the lows that we made in July. Okay, I know we've been watching this here on SB for a couple of weeks now at this point, months almost. So this is the near-term resistance target I'm treating much more seriously now that we've made the push. Topside break, believe it or not, there's really not much in the way of the upper median line. You're basically looking for a rally into like 12,150 till 12,160. And then beyond that, I mean, you're looking 1225, 1240. So long story short, you're at risk here. Longs are at risk below 12,050. You'd need to see a weekly opening range break to get bearish. Okay, not necessarily want to play the bearish side, but necessarily I don't necessarily want to be looking for longs at this point. If we get a pullback into the former median line resistance, this would be a nice entry. The broader bullish invalidation continues to move, guys. Every single day we just move it up the slope. All right? So as long as we stay within the confines of this, obviously this range has caught some major lows in price action. The broader trend remains weighted to the upside. So just wanted to bring this up real quick before we went into the crosses. With the relative performance that you're seeing, dollar index at resistance finally has come into a major resistance target. Keep your appetite curbed at this point for longs. Now, where does this leave us on the dollar crosses? So here's what the scalp featured last night. So the British pound, I didn't really think I was going to want to get involved with this week, to be honest with you guys, after last week's breakdown. Here's the weekly chart look like post-NFPs. But there was a really compelling signal, okay? And I do think that you still probably get that drop into 49.89, basically the low day close and the lows that you made for January. The only thing is that you saw momentum catch a real clean trigger to the downside there, and you're basically looking to play this on an intraday basis, guys. So here's what the scale chart looks like from last night. As long as we stay below this median line range, you're looking lower. Now, last night, the opening range for the week, okay, took place right above that slope line. So you opened up Sunday trade, it pushed into a new high. You have a nice Monday, Sunday high to trade against, okay? So for me, I'd rather wait to see that opening range break and possibly play the recovery into 52.20. Or if the opening range breaks to the downside, targets are right back into 49.50. So the one necessity, guys, and the one thing that we always need to remember when we're trading, when we're trying to ascertain bias based on opening range, is that it necessitates us to sit out some of the trade. I know for near-term traders, for short-term guys like us, it's really, it's really frustrating sometimes. But that being said, the trigger that happened overnight was pretty clear. So here's what we look like. What time is this? It's about 7 o'clock last night. You had a nice trendline support. You had a nice trigger that had already given out, but price action hadn't given us the break. For this position, guys, the actual hardcore signal came with a break of the U.S. opening range low, just below 51. And you'd be looking for 26, 28 pips per scalp on the downside. You got plenty of that. Here's what the British pound looks like right now. Okay, so there was the break in price action. Again, I wouldn't have necessarily played that short from there because the U.S. opening range low was still intact. And in fact, we sat on that for another 2 hours before that broke. A couple hours into the Asia Pac session, this was the break that would have put us a little bit more definitively on the short side, sub 50.88, looking for about 28 pips. You got that on the way down here. So near-term support is still going to be, let me zoom this out for you real quick, snap these lines, just to show you sort of where we are here. This is still the structure that we rebounded off of, okay? And this is going to be the near-term bullish invalidation level. We need to get below this region here. So we're still looking lower in the pound. Targets, if you're holding shorts on this one, I didn't get that entry yesterday, guys. In fact, I was on Sterling Oz. I'll show you a setup there. I actually got stopped out on that in overnight trade, but I'll show you that in a moment. The trade here is this. I mean, you're looking for either a break above 51.45 to open up the opening range for the end of the week, heading higher into 52.30, 52.50, or you look for the breakdown. On a breakdown scenario, my only concern is that there's really not any near-term targets, guys, until basically like the 2013 low. So you're looking at 49.50, which was the stretch low for 2015, and there's really nothing to like 48 after that. This is not a scalp. Just as a disclaimer, we highlighted this region yesterday. This is the main key support structure. Again, if you're holding shorts, I wouldn't be looking to push anything through this until that breaks. But the triggers near term have been clean. So we'll play inside the range as long as we can, but we'll be looking for that opening range to clear out. Petro says, what is your favorite setup for today? I got stopped out of the Sterling Aussie short in the European session. I thought it was breaking lows of the session, and I thought I had a trigger. Guess I was wrong. Need inspiration for the rest of the day, please. You got it, Petro. I'm going to show you some nice setups, man. I got stopped out on that, too. Let's take a look at that real quick, and I'll show you exactly how that panned out on a 5-minute chart. Listen, Petro, I don't want you to say it's not that you were wrong or right, guys. Trading is not wrong or right, okay? We're putting ourselves in a position, in a scenario where we could take advantage of market fluctuations. The market is always right, okay? You're just with the market or you're not with the market. That's it. So here's how I played this trade. This was a Sterling Oz. This is also featured on the scalp page right here. Okay, here's what we looked like last night, and I'm with you. There's no reason that for me that trigger wasn't really a bad trigger, Petro. It was just a push through. Okay, here's the region of resistance we were looking for, and again, 97.20 into 97.38. We did probe slightly through it. Remember, on these scalps, guys, the market is not static. Okay, you're working with a pair here that gives you a 200 pip ATR. So you got to give yourself some space. Okay, this is not a vacuum market where you can sit here with really super tight stops, especially on a wide range scalp like this. But in any event, as we came into this region, I was with you. Momentum was holding 70 on the upside. Here's what the near-term trigger looked like on the 5-minute. To show you exactly why I jumped into that position. And again, I'm not doing this because this is what we want to do. We got stopped out, but it's good to learn from our mistakes. Here was the rally into this major key region of resistance, and you're absolutely right. Here's your opening range for Asia. Okay, the prudent move would have been to look for a break or a challenge of that opening range first, but there was the rally, there was the trigger. Okay, the trigger pulled back in momentum and found resistance on that same trigger slope to the high. This is where I jumped into the position. Okay, I think the actual entry was 96.84 or 85, like right here. On the rally back in, this is a 5-minute chart now, guys. So the rally back into the former trigger held as resistance, and then it broke the actual primary trigger that I was looking for, and that gave us even more conviction. All right, cool. Now we're on our way down. We were up about 15 pips at one point when the market reversed and went right through. On this trade, I'll eat that stop all day long, guys. It's not a big deal. We didn't even get a 50 pip stop on this. Why? Because of the opening range of the session. So inherently, when I jump into a position and the trigger breaks, the stop goes against the high for that session. So we got stopped out pretty quick. In fact, I was talking to Jamie online while this trade panned out. He said he was looking for entry a little bit higher. I thought it was turning over. Lo and behold, an hour later, I was like, oops, we're out. But long story short, the conviction behind the trade was right. And to eat a stop of 20 pips or 15 pips or so on a scalp like this, it's completely okay. So Petro, I don't want you to get too hard on yourself. It was a false signal, no doubt about it. It looked pretty clean to me. And then we pushed into the major key region here. Let's bring it back to the 30-minute, where we've found some resistance now. So where does it take us from here? The reason that we're looking a little bit lower in sterling Oz in general is because of the construct that we're in here as well. So you're looking at 100% extension off the low here. This is a basic 618 retracement from the entire decline. And if it's going to turn over, this would be a sort of susceptible place for it to do so. Sorry, guys. Just bear with me one moment here. Okay. So what I'm waiting for right now is this. Here's the trigger I'm looking for from the low in momentum for the week. Okay. And then I need to see a break of the Asia-Pac opening range low / European opening range low. So break below 96.90 near term. You're looking for a rally or a sell-off, excuse me, to like 96.30. It's about 50 pips, so we're going to have to play it pretty tight. The stop, you know, if you put the stop against the highs, guys, it's not going to be able to give you a risk-to-reward ratio. So for me, it's a little bit of a tight call, but I'd still be more inclined to put the stop against 97.40. Not even looking for the highs. I think if we get through this confluence region again, you're going to see this thing pop. So we'll see if the triggers give out. And here's a quick trigger on the upside to take you out of the shorts if we do take this position deeper into the U.S. Open. Remember, as far as U.S. event risk today, it's pretty limited. You do get the NFIB Business Optimism Survey. That's going to come out in about 15 minutes here. Not a major market mover, but could shake things up. The real print for today will be wholesale inventories at 10 o'clock, expecting a contraction of 0.1% there. Tuttle says, I'm short sterling loss from 97.30. Well done. My man, excellent entry. Excellent entry. 97.38 was the top of the range that we noted in last night's report as where we wanted to, would be a really good sort of area of which we wanted to enter. So you got it right on, man. Keep it up. I'd be holding that one. I'd be looking for a move into the region that we just noted, 96.15, 96.30 here would be a nice cushion region of support. Not bad. And also, you know, as price action is developing, we want to make sure that we're being attentive to what's happening in the now. Okay, so I'll always do this. Once I've made some sort of completion pattern, or once we've made an opening range break to the downside session, go ahead and tack on a quick retracement. Just get an idea where the first level would be. And a 236 takes you into 96.60. So as you come into this region, you see a little bit of a hiccup. Cool. Look back at that trend line right there and make sure that holds. If it does, we'll look for a continuation to that 96.15.30 pocket. But we want to make sure we're being very attentive to what price action is saying. All right. Looks good. Tuttle says, yes, thank you for the report. Hey, my pleasure, man. Again, I'm just showing you guys levels. You're the one making the trades, Tuttle, so well done, sir. All right. So any questions on the sterling? Let me clean this up a little bit for you guys. There's 5-minute triggers on there. There you go. Again, for anyone who's new to the room, a quick reminder that at any time you can always click on the camera on the top right-hand corner of your screen here to take a snapshot of any of the charts that you're seeing presented. So if you do need these levels for your future reference, you can always have them. As always, they will always be on SB Trade Desk. But for the updated charts during the webinars, guys, feel free. It's an awesome feature for you guys to grab the snapshots you need. All right. Petro says, I got it. Thanks for that. Good inside. Right on, Petro. Cheers. We'll show you some more setups. Don't worry. The week is just getting started. We're just kicking the tires. Okay. So that is sterling dollar and sterling Oz. I do want to take a moment just to talk about sterling yen real quick. From the swing side of things, it's the exact setup that we're looking at from the intraday side of things. I just wanted to note, guys, that this, scenarios like last night are where you guys can really benefit the most from SB Trade Desk because, when our levels are lined up and when the setup is very similar, if one trigger fails to put you in the trade or price fails to reach, there's still other things you can look at, guys. and I just wanted to prompt this. You know, hindsight's always 20/20. I get that, but this was a signal in my mind that was actually much clearer than even the Sterling laws we just looked at. Okay, why? Momentum divergence into a trigger break. How many times have you guys heard me say that in here? I'll take that 9 times out of 10. Right? And especially where we were coming into. So again, if we take a quick zoom out here for the scaled look on sterling yen, it's the same setup that we're looking at on the swing side of things. We were coming into, we had a soft support or a soft resistance barrier at 83.55, but that's not what's important. It's the trend line that's important there, right? And then as you're pressing into a fresh weekly opening range high on a Monday, Tuesday stretch, there's your divergence, price action, higher high, higher high, higher high, followed by a 3-point trigger break. Okay. Now, just in case, you know, you might have been thinking to yourself, well, here's sterling Oz again, right? I don't want to get, you know, chopped up twice. On this trade, again, you look for a break of the European opening range because that wasn't so far off here. So even if you jumped into this late, you had plenty of ample opportunity to get in. You're looking for about 35, 40 pips per scalp. You know, you would have attained more than that right here on this drop. So, you know, although the entry literally missed by 2 pips, guys, you know, we want to be watching these momentum signatures. Go ahead and zoom in price action, and if you know, if the signal is there, it's still an operative trade. Now, the one thing I do want to note is this: if you do take a position like this based on the trigger, you can't be sticking with the longer-term entries and longer-term, you know, levels that you'd be looking to close out on the swing side of things, right? You got to choke up those targets because your initial entry, you know, is based upon a technical factor in the near term. So, you know, you want to default. You don't want to look for the initial targets, you know, that we're looking on a swing, which is basically an 82 handle. This would be the first support target that we're testing right now. Again, just to take into account near-term price action on what just happened. We've put in a high. We've made an opening range reversal. Tack on a quick retracement. Stop traffic. 618 retracement right there. All right. And there's a topside trigger. If you're holding shorts, that thing gives out. You probably want to duck out. So that's sterling yen. Any questions on sterling yen? So not necessarily a scalp that's on the intraday page, but you know, it's definitely the swing charts or swing trades yesterday. We're looking for this drop. Again, literally pips away, but nice drop right off. All right, let's move on. I do want to take a moment just to touch on dollar yen because this is, again, you know, the major region of resistance that we highlighted yesterday into 121.80. Excuse me, 121.83 has been what the focus has been in. And guys, again, you can't make this stuff up. I mean, if you ever wondered yourself sometimes, you know, about technicals and the validity of it, I mean, you can't make this stuff up, guys. Right? Look at that. That's price action. That's technicals manifesting themselves. There's your median line construct off the lows that you made in December. We highlighted 121.83, which is not just, excuse me, which is the stretch high, excuse me, that we made for December and the 2014 highs. Nice confluence region there. It's exactly where this thing spiked into an overnight before turning over. Okay? So at this point, again, you don't want to be the guy calling the high on a rally per se, but seriously, guys, I even gave you a warning here in red yesterday just because I really, you know, high risk for a washout reversal below that region on the daily chart here. And we're already, you know, well 100 pips off the high. So I'm no longer interested in the dollar yen long. In fact, we've been looking for this rally to stretch into this region in overnight trade. Here's what the scalp looked like. Again, the trigger and momentum wasn't as clean, but certainly a very, very clean break of the European opening range on this outside reversal candle was all you needed to see. Yet again, I'm sorry to be a broken record, guys, but all these, most 90, 80% of the scalps have been panning out perfectly in European trade. So if you're trading on the European side, guys, you really have the cream of the crop. If you're on stateside, it might be worth it for you to shift that alarm clock earlier just a little bit, because the opening range for Europe has been a godsend for a lot of these crosses. So here's the dollar yen again, right into 2 hours into European trade. Nice outside candle reversal. Wouldn't have really done anything here, to be honest with you. It's the break below 121.65, the opening range low for Asia Pac and Europe. That would have been the definitive break with this trigger here in momentum. Okay, so that's when that trigger gave out. So looking for near-term support at 120.80, this region right here, the median line of the current construct that we're in. Let me just zoom this out real quick. Sorry, guys, just need these lines to snap here. There we go. Okay. Okay, so notice, again, where the highs came in and why we were talking about dollar yen being at such a critical level yesterday. Okay? Conviction in your levels, guys. It's all about conviction in the levels. We never know if it's going to pan out. We never know if it's going to actually turn over, but if the analysis is sound, you have a good risk-to-reward ratio, and you have a proper entry, something putting you into the position, there's no reason. There's no reason to be too concerned. So 120.80 near-term support. This, in my mind, even though the opening range low for the week is at 120.60, this, in my mind, would invalidate the weekly opening range based on the slope, okay, that we're on, and also based on that longer high that we put in at 120.80 there. Also note one thing, momentum. Every time since the low we made last week, the weekly low, every time momentum pulls back, 40 hold, 40 hold, strict 40 hold. Well, here we are again. So if you see 120.80 give out, momentum dips up 40, I'm going to continue to favor some sort of larger scale correction here in the dollar yen near term. This might actually be a great entry for the longs. I don't know. We'll have to see what the U.S. Open looks like. But if you're holding shorts, guys, this is where you want to be taking some off the table, bringing your stops to break even, and seeing what the U.S. opening range looks like. Questions on dollar yen. Philip says, hello, Michael. First of all, great idea with SB Trade Desk. Thank you, my friend. First time I'm able to see real trades being made by professionals. Second of all, do you always trade like 1 or 2% of your account in your scalps, or does it depend on the pair or the situation? Philippe, 100%. First of all, welcome aboard, man. It's great to see you here. I don't want to put a blanket percentage because it's really dynamic. For me specifically, guys, and I can only tell you what I do, it's really based on the trade. If it's a trade I have a lot of conviction on, it's a big, big level, you're getting a really clear, trigger to put in, on that trade, I might push it. Yeah, I'm a little bit more aggressive. I've been doing this for a very long time, so I might be willing to put a little bit more on the table than the average person. But, everyone's risk tolerance is different, Philip, and I hate to give you like a template answer like that, but it really is. I really can't tell you how much percentage-wise you want to be trading. It's really based on the merits of each positioning, okay? Pooja has a question saying, took a dollar yen short from 121.60, but all out at 121.25 support. Okay, so you got out not too bad, from where, a little bit higher from where we are right now. Listen, you're following the strategy. You're following the strategy. You're looking for a quarter daily ATR. It's about 23 pips, so I can't hate on it. It's fine. And honestly, again, with the dollar yen, guys, there's a reason, if you've been following for a while, I call this trade the abomination. It's because it's notorious for really massacring people. Large scale reversals, false breaks, continuation patterns that fall apart, yada, yada, yada. And with everyone and their mother right now calling this sort of the breakout, looking for 124, if this thing is going to turn around, this is sort of the region I would expect that turnaround to happen. Okay, and I'm not talking about looking for 115 or anything like that. I'm just, a halt to this rally, a mean washout. I'm talking maybe like 120, maybe a deep pull into like 119.70. Maybe even check the monthly opening range low, and then continue. But I'm no longer really trying to play the long side per se at this point. And remember the index, right? Same thing on dollar index. So some it's warranted to be cautious here on this play specifically. All right. So Pooja, I hope that offers some clarity on dollar yen. Philip, again, let me know. He says, yeah, I understand. But then how do you distinguish placing trades in pairs like euro dollar or sterling dollar and pairs like sterling Oz where moves are much larger? How do you distinguish between placing trades, Philip? So you're still talking about trade size? So obviously you got to know what your pip value is, right? Before you jump into any position, you got to know what the per pip cost is. In terms of trade size, yeah. Again, it's a standardized way I do it, Philip. So, you're trading X amount of lots on average, right? And for me, based on the conviction, it's going to be a multiple of that X. So if it's a trade, a wider range scalp. So for example, let's just go over yesterday's setup that I took on Sterling Oz. I ate that stop with that preemptive short up here right before this thing turned around. On that trade, okay, because the stop was closer than the 50 pip ATR, it was all right for me to trade standard trade size. If I was going to put the ATR or the stop 50 pips away, I'd be trading half standard size because it's a long range scalp, right? And the implications if you're wrong are going to hurt a lot worse. Does that make sense? It's based on every setup is its own merit. So yeah, I'm really close to resistance. The trigger looks pretty good. Sure, I'm not looking for the full 50 pip stop on this. I can trade regular size. If I was going to look to stretch out the stop for 50 pips, I'd probably be trading half size and such. So it's always a multiple of what my typical standard size trade will be. He says, I think I understand now. Makes sense. Right on, Philip. Keep asking, man. You're in the right place. Again, great to see you in the room here. Pooja says, yes, thanks. In that counter trend trade, I was super cautious. And that's another thing, Pooja brings up a great point. Philip, whenever I'm trading, if it's a counter trend trade, it's going to be that standard X size. Okay, whatever you're trading with, guys. If you trade on average 5 standard lots, 10 standard lots, 1 micro lot, doesn't matter. But if we're trading counter trend, we'll always be half lot size, always. Because, listen, we're not good enough to call every high and every turn. Nor should you be trying to. That's a fool's errand, but you get the picture. Are we on the same page, Philippe? Tuttle, Pooja? Great discussion. Great discussion. Tuttle says there is risk management indicator that converts stop amounts into the account percentage for any pair. That's awesome. Tuttle was just bringing up a good point. Guys, there are all kinds of mechanisms you can use. There are plugins. There are all different types of templates that you can get that'll actually, you plug in your metrics and it'll tell you per trade, this is the amount of leverage you should be using. These are the amount of lots you should be using. So if that's something you're really struggling with, I would definitely, that's definitely an alternative you can take. For me, I try to keep it very easy, guys, and it's based on my convictions on the trade. And that's based purely on the technical clarity. And not only that, guys, let's say we were heading into a major event risk today. Obviously, I won't be trading, my standard lot size, knowing that I'm coming into an event risk which could spur, a 50 pip rally in each way. So we just got to be nimble, and we just got to make sure we know that we're treading lightly on where the market is. And I think we beat this discussion up, so I'm going to move on. Yes, glad for the discussion too, Eileen. Cheers, Philip. Cheers to you as well. All right, so back to the markets. So dollar yen. I think we talked about this one as well. I'll be looking for. So let's just take one step back. So now that we have essentially a very clear opening range for the week set just below resistance, it's going to be the pressure on the downside break to open up that correction lower in dollar yen. All right. So up to this point, it's Tuesday. The opening ranges have been very clean for the dollar yen, the sterling dollar, which is just above support. I do want to talk really quick about Kiwi dollar. Okay, this one, for those of you who were in the Daily FX webinar yesterday, textbook last night. Textbook. I even gave you guys a heads up right as this thing was breaking. We opened up the week at support. I'm going to zoom this out because I think this is the most impressive, maybe not the word impressive I'm looking for. It's the clearest graphical representation of the kind of analysis and the kind of turns that we want to really focus on when we're trying to play these pairs. So do you see this chart yesterday, guys? I tweeted this on SB last night in Squawk. Do you see this range between these trend lines? Do you see how many reversals, consolidations, rebounds, breaks have happened in this region? So when you come into a scenario like this week where you're opening up the weekly opening range right above a play like that, that's your dream. That's like a go-to scalp, right? So we were opening up the opening range low for Sunday. We came right into 73.20. We pushed into a new high into US. You came right off, and basically you're looking for the weekly opening range heading to Asia Pac. The Asia Pac opening range was at support. A couple hours into Asia, that broke. Initial target 73.20. You're looking for a drop into 72.80. Okay, 50 pip drop. You're looking for about 24 pips per scalp. So, you know, a decent play into the lows. If you held that trade and you're looking for the break subsequent beyond that, you kind of got stuck and held up here. But we're looking for 72.25 on the subsequent pull lower. You stay bearish below 73.40. Bearish invalidation at 73.90, which is the weekly opening range high. Do you guys follow? So real clean setup. I'm going to readjust the levels now. I just wanted to leave this as it was yesterday during the webinar, just to show you the weekly opening and the range and how the weekly opening range break charged that little scalp to the downside. One thing I want to note, guys, just a quick reminder that the Monday webinars are public. So we do one public webinar to give guys a nice little sneak peek about what you guys get every day. And that's for free on Daily FX. So it is archived on SB as well, but just a quick reminder there. All right, so now that we've made a new low, obviously this retracement is null and void. We're still going to want to maintain that opening range high here. And I don't really like to tack these on mid-session like this because you have no way of knowing that this is any type of concrete low. But if we do, just for argument's sake, you can see the 236 comes in right in the same range that we're looking at. And that means I don't necessarily need to stress this. On the short side, I also do want to make one adjustment to that 764. And bring that into a 78.6. So quick note on that. I'm sure a lot of people have a question on this real quick. What's the difference in 784 and 786? 786 is the actual fib ratio, guys. 764 is 1 minus 236. But in any event, the way I use those retracements, because, I mean, you don't want to tack on a million retracements when you're working, is you always want to target the 764 in a trade, and then you always want to target the 786 to enter a trade. Let me say that again. So if I'm in a short positioning here, I'll always target the 764. If I'm looking to initiate a new position or a rebound off support or a break of that fib, I'll want to see the 786 give. I'm always trying to push the extreme because I'd rather be a little early on the entry, a little early on the limit than late on the entry, late on the limit. So just a quick note there. So that brings our near-term support right now at 72.69, so a tad lower from where it was. And again, a break there, you're looking for 72.25. Here's what the dollar yen looks like, or the Kiwi rather, looks like on the daily. And this is why yesterday was such a big day. So aside from the zoomed out Kiwi chart where we saw that major median line range really give us all those key reversals in price, right? Just as the intraday chart was showing us this, the daily chart was testing a huge region. This is the 618 of the rally. It's a 618 extension from the decline off the highs they made in 2014. It's a 38.2 retracement. This is from the ascent off the lows you made in 2009. So you had a huge region irrespective of what was going on in the intraday charts, just on the daily. And again, that's why yesterday's drop in Asia was really, really big here. Tuttle saying, where would your stop have been on the Kiwi short? Right, so this is how you want to play the Kiwi short. So on the opening range break, since we took it for Asia, it'd have to be above the opening range high for Asia. So in that scenario, you're basically looking at like 73.50. Okay, which would have just put you just over that. On an opening range break, Tuttle, sometimes you're going to have to strep it a little bit, like 5 or 6, maybe even 10 pips to get the entry when you're playing the initial opening range break. If you didn't get this drop, that's okay. Another entry offered on the way up here. Okay, and then again, you're pressing against the opening range low. So on that one, momentum held into 40 on a 5-minute chart. Let's see if it gave us anything. There's the break. Yeah. Yeah, would have been a tricky trigger. Would have been a tricky trigger. Let's see if you use the low in price action. Probably would have been the cleaner one. Yeah. Okay, so remember, a little trick. A lot of times when you go to draw your triggers, you're automatically going to go to the lows and draw your triggers. But a lot of times, the actual operative trigger is going to be the best one when you use the low in price as opposed to the low in the oscillator. So this trigger gave out way too early, and you actually got another push into a high before it turned over. This trigger, using the low in price, a little bit better. A little bit better. Yeah, you pushed into a little bit of a high, but your stop would have been against the opening range low up here. So that would have panned out on that one, Tuttle, to the degree for a quarter of the daily TR there. Does that make sense? I need to learn to see those session ranges without trade session indicator. Yeah, trade session indicator, Tuttle, is great because it's a lot easier just to identify them, but it does clutter things up, right? Yeah, too busy, he's saying. Yeah, I hear you, brother. I tried to use it for a while. Listen, I bring it up for just for guys at home to be able to better visually, see where the sessions start, but it does get kind of busy. So just note the times in your local times, guys. I know that in the United States, 8:30 is going to be the opening range. I'll look for U.S. 6:30, 7:30 into the afternoon here. I'm looking for the opening ranges for Asia. 3 into 4 o'clock a.m. here in the U.S. looking for the European opening ranges. So just kind of put a mental grid in there, Tuttle, and before you know it, you'll start watching them before you start noticing them before you even know. All right, so could get a little bit of bounce here in momentum. You're getting some divergence, obviously, into the low, price action lower low. There's a trigger right now, and if you get that trigger, you look to a rally back into like 73.40 or so. And again, that's the underbelly of the major key region, that we just highlighted. So keep this chart in view, guys. It's pretty compelling. It's pretty compelling the way that this has continued to guide price action. And it really does have us looking lower below 73.40. Tuttle says, thank you, Michael. You're more than welcome. Jay Jackson, or could you use the session indicator just on the 5-minute? Yeah, that's another way to do it, Jay. So when I'm actually scalping, guys, I have this 30-minute chart that I obviously show you guys, and then I have a small 5-minute chart with nothing on it but just basic RSI and price action, right? On that one, Jay, yeah, that's actually probably a great idea. Go ahead and tack on the session indicator if you need it there to be able to just kind of get a quick look at what the session highs and lows are. The best thing to do, guys, is as soon as the market opens for that session, just quickly tag, quick dash line to the high, quick dash line to the low, to watch that price action break. All right, so let me just clean this up real quick as well and put in the operative triggers here as we head into U.S. trade. And that is the Kiwi dollar. Huge range of support here. As long as you hold below 73.40, watch out below. Last but not least, from what's on the intraday page, I do want to just quickly touch on gold. I really hope you guys have been watching some of these levels because the clarity of the levels we've been hitting are disgusting here. The actual stretch low was exactly at the first target that we noted on Friday at 11.55. Here's what it looks like on the daily chart. Well, before I even show you the daily chart, here's what the intraday chart looks like for gold. So what's so keen on 1155, Mike? Why are you so excited about it? Very simple. It's the 2010 swing low that you made here in July. More importantly, it's a basic 618 retracement from the advance off of that October 2008 low, 1155. It's the top side of a major key area of support that we talked about as we came into this last year. This is a weekly chart. As we highlighted yesterday on SB, on the weekly chart, this is the key range of support that you really need to be cautious of. We're just probing into it now. Daily chart. While you hold below this circular region into 1174, the way down, or the bias remains way to the downside below 1174. And here's what the daily looks like. All right, so you got that drop, 1155. I didn't have it marked on the daily chart here because, again, it's a wider, way longer retracement, guys, so I'd have to go back pretty far back to get it on here. But 1155 is the low. Next major confluence is 51 into 50, which is also represented in this region here on the weekly chart, right? The bottom of that range is 1137, okay, and that's 100% extension from the decline off the late 2013 highs. So within the consolidation pattern, within the consolidation pattern, off that 2013 late high, the 100% right off that comes in at 1137. All right. Keep in mind, we had an outside reversal candle through the lows that took us through the yearly opening range low, but you're at key support. Okay. From a scalp perspective, you're probably still going to want to favor the short side below 1174. As a disclaimer, guys, I am not trading gold here anymore. That's it. The drop on Friday, and specifically today's drop tagging 1155, I'm just not interested in the short side right now. I think just like dollar yen, high risk for a washout here near term, especially if the dollar holds this resistance. Okay, so we'll put gold on the back burner for now. While noting that we're coming into a major area of critical support both on the weekly and daily scales. Momentum signature on both of these, the weekly and daily scales, don't give us much conviction as we flatline here. So we're going to want to take a little bit more of a cautious approach on gold while noting key support into 1150. And that is gold. Some other commodities that have been following suit. Obviously, just a quick look here. I put out a piece or a chart yesterday on copper, which is coming into a nice support area. A nice response last week with an outside reversal right off a basic 38.2, which happens to confluence with a nice median line, right off the highs. This is from 2014. So trigger former support, now offering some resistance. And the monthly opening range is very well defined, 260 into 271. So that's the break we'll be looking for to get the directional play here. Again, the opening ranges in commodities tend to work very well. Here's your January opening range break, happened on the 12th, closed that month at the low. Here's the opening range break last month, didn't happen until the 24th, but we did push right into the high. So I think for the next couple of days, next couple of weeks, your focus is on that range between 260 and 272. In other commodities, if you look at silver, also coming into a major key area of support, very similar to what you're seeing in gold, although again, the magnitude and the scope of the size of the moves is much smaller. Huge confluence support. We talked about this yesterday too, 1515 to 1569, major key support, still holding lows here for silver. And obviously the oil range still in view, guys. No change on that from what we've been talking about for the last couple of weeks there. So that's a quick run through the com block and through the intraday setups we're following on SB. If you do have any questions, guys, feel free to throw them on the message board. before we wrap things up. I'd be more than happy to take any questions on strategy, specific pairs you're looking at. Again, looking into the U.S. session, we did get the NFIB Business Optimism Survey coming in at 98. Expectation was 98.9. So no major play there. Next on tap at 10 o'clock is going to be wholesale inventories. Again, we're looking for a contraction of 0.1%. Unless there's a major deviation there, I don't think you'll see the miss. The biggest event risk, like I said early in the week, guys, for the U.S. dollar and some of these crosses that we're looking for is going to be retail sales, and that comes out on Thursday, looking for a snapback from a contraction of 0.8%. How about the CAD yen you posted about? Tuttle says, sure, let's take a quick look. It's an interesting setup, right? So I don't actually have a scalp setup for you on this, but you might have seen me post last night the daily. And, it's a big range. It's a big region here. Again, the opening ranges is really, oh, this is sterling yen, sorry. CAD yen. The opening ranges on some of these pairs, specifically with what we're looking at, like for the CAD dollar. So let's take a quick segue. We didn't actually talk about dollar CAD because it's not on the intraday focus anymore, but, we've been struggling with calling, this the breakout, and I think we should be. Obviously the broader directional bias to the upside, both from a fundamental and from a technical standpoint, in my humble opinion. But the question is this the full-on continuation, or is this going to give us something, dollar yenish? Aurelian, never be sorry to ask late, my friend. It's always good to see you in the room. So 126.46 is the region I needed to see clear. Okay, we didn't. We tried to push through it today. We're back below it again. It's not a major fib. It's an 88.6, but look what's there, guys. Okay, the upper median line parallel for a formation that has held price action for well over 4 years. Okay, pivot, break, instant support. Yeah, we threw it, but that level comes in dead on with a longer dated 88.6 from the decline off the 2009 high. Okay, add to that, we're looking for conviction of a breakout. So if this is a breakout from a consolidation, you want that run to give you something. It can't just fizzle out before the last swing high. That's not going to be a breakout in my eyes. So I don't really have any plays on this just yet for the CAD, to answer your question, Tuttle, which is why it drew my attention yesterday to CAD yen. I wanted to see what the CAD crosses were looking like. Before we do that, real quick, I just want to take a quick segue into dollar CAD scalp. This is the scalp that we were looking at last week. Just want to show you how the levels have been panning out. Really messy to start off the week. Obviously, here's your weekly open. Okay, so the opening range actually did break to the upside here in Asia Pac, at least the initial weekly opening range. It got you that rally into 2660, but couldn't hold it, right? Couldn't hold it. So, I don't really know what to do with this one, guys. I'm just going to sit on the sidelines. It looks like you could have completed a 5-wave up, and you look to play the correction lower. The momentum trigger didn't give out, or hasn't given out yet. And it's really the break below 2560, 2555, this region, that would, in my mind, put me a little bit more comfortably on a southern trajectory here for dollar CAD. It's just not, the conviction isn't there. So with that in mind, with where the dollar CAD is, Jay, or Tuttle, this is why CAD yen comes into focus now. Okay, so if we're within the confines of this nice ascending formation, the lows come in at a basic 236 and 95.20. That's backed by a basic lower median line parallel. The highs come in just below the median line itself, and that's just below the 96.60 100% extension, those swing lows. So that's the range in focus. It is a rather tight ATR with 90 pips on the daily. You're getting a lot better buck or bang for your buck with the sterling crosses in general. But for me, heading into the month, not a pair I'm usually ever really focused on, but I want to see this thing give us either a break sub 95.20 or a pop through 96.60. The range is not that big in consideration with what we typically put in CAD yen. So something like this does turn me on a little bit early in the month. We'll see if we can get a definitive break. Initially, if we break the median line, you're still just looking for a drop into the monthly opening range low. It's this break here that would open up the southern side. And the compression and momentum is ridiculous. You see how we continue to hold 50 as resistance? 3-point trigger. Let's see if this pans out in the coming days here. Another interesting setup I wanted to put out, I'm not sure if I tweeted it yesterday, was Euro-Oz. That's coming into a big region of support as well. I really just want to point out 140.40 into 140, this whole region, guys. 140.35 into 140.45. Okay, huge region of support. You're looking at the November 2013 lows. You have to go back quite a ways to get that. That's not the major deal. The major deal is you're also looking at the 618 extension from the decline off the highs. That's not just the major deal. You're also looking at the 1618 extension from the near-term decline. In case that's not enough, it's also the low day close for the month of March so far. So above 40.40, watch your, above 40.35, watch the downside here for Euro-Oz. Obviously, the definitive break is going to be the lows, the spike low that we made on NFPs. But if you do, it's a pretty big drop. It's 138 pips, 140 pips to the downside before our next major target. So big area of support, big area of support. Add to that you also have that median line construct, which has caught the highs very well. And on a close basis, right? Don't worry about the wicks. On a close basis, really clean. So another one where with the Euro and the Aussie kind of in limbo, a nice one that could give us a nice tell once we finally clear, for example, just the weekly opening range. Here's what the Euro Aussie looks like on the daily, or on the intraday. See if it has anything nice. All right, so now we're testing the weekly opening range low as we speak. Okay. Snap some of these lines. Just want to see if there's any slope lines coming into play here, guys. Bear with me one moment. Okay, don't necessarily stress that. Yeah, watch that region between 140.35, guys, and 140.50. Really, really huge. That's going to be the focus for today. Tuttle says, very helpful. Thank you. You're more than welcome, Tuttle. My pleasure. Tom, great to see you. Says Euro-Yen broke the Asia Pac at 4 a.m. Eastern, then the monthly and weekly opening range lows. What do you see as a target below this level? Is it scalpable? Let's take a look, Tom, at Euro-Yen. Okay, so here's your Euro-Yen weekly open. Just give me a second, Tom. Let me just put this together for you, brother. Here's your March open. So the only dispute I have on this one, Tom, is I don't know if we want to necessarily call this a monthly opening range break because you really haven't put in a definitive reversal and test. Remember, when you're trying to put in the opening range, there needs to be a test or a push into a higher low and a reversal to try to test the other side of it to define the range. When you open up a month like this where you're kind of just on a sliding path like that, I don't necessarily want to call this an opening range break for the month. That being said, I do see what you're talking about as far as the weekly range being challenged, and you're not pressing the lows. So 130.13, you're basically pressing the all-time low here, or the yearly low right now. see, 128.55 is really the only target I'll have near term. Let me just tack on some. It's a real steep slope. Outside reversal here today. Okay, let's go back to the 30-minute real quick. For those session opening ranges that are larger than a quarter ATR targets, are those trades you don't ever take? I don't want to say ever, Tuttle, but I'll shy away from them, man. Yeah. So if the opening range is like 50 pips and the quarter ATR is 35 pips, it's tough, man. Guys, remember, nothing supersedes your basic principles of trading, of keeping a positive risk-reward ratio and always being, putting the probability in your favor. So if your risk-reward can't ever, doesn't make sense, yeah, unfortunately, Tuttle, on those I'll sit out. I don't want to say ever, because if the conviction is there, if it's an event risk and the market's moving, or there's something prompting price action, I'm not going to stand ahead of it just because of the quarterly ATR. But typically, if the opening range is pretty wide, I really won't like operating in that kind of environment. Yeah, I don't really have many targets for you, Tom. I wish I had some more, man. I really don't. I have to take a look at this. I don't want to waste. We're just about up on time. I don't want to take any more of your time going through this, but it's tough beyond here. If you break the downside, here's I would just be looking at that next soft target, the 38.2. It's a ways away from where we are now, but 28.55 is really the only thing I'd be looking at. I'll see if I can put something else together here for you, but I saw someone asking, was it Aurelian? Asking if I have any targets on the euro. Who was that? Petro says, do you have any scalp targets on the euro? So I do want to show you the euro chart real quick. I don't have scalp targets per se because I don't really want to scalp anything that's on the extreme like this. Listen, you're looking to sell rallies. That's it. This thing is an oversold condition, rather. This condition can hold for an indefinite time period. Remember, something can stay oversold for a day, a week, a month, a year, a decade. This is not where you want to get cute and try calling the low. So I'm not really doing anything here but selling euro on a scalp basis. So it's got to be a pretty compelling rally. It's got to be a pretty compelling reversal to try to sell. The only thing that would even attempt to put me on the buy side would be, a break above the weekly opening range high, and then that reversal, like I said, in momentum on the daily chart. Other than that, I just don't see the point, guys. You know what I mean? It's only got 27 pips on the daily ATR. It's tough, this thing way down here at these lows. So it's just not in my personal humble opinion, I don't think it's necessarily going to be your best, your best bang for your buck here. But no, you start to get real sparse on the scalp targets. The last target I had, we just hit, and I can't even remember where that was derived from, to be honest with you guys. You have to dig deep in your charts for this one. Out come the monthlies. Was the stretch low that you made in 2003, late 2003, and that was at 107, like 107.88. That was the last target. We already blew through that, so we'll have to do some reasserting on this one. Tuttle says, right, thank you. Aurelian, hope that helps. Tom, let me know if you have any questions on the ORs, Tom. Definitely, if you need any other quick breakdowns on the opening ranges, I'd be more than happy to do that. Aurelian says, thanks. All right, guys, so we'll wrap it up there. Again, keep your eyes on the majors that we talked about today. Sterling, Kiwi's going to be very interesting to see if we make this move. Dollar, yen at risk for the reversal there. And obviously the gold trade, something we'll be looking for conviction, as well as the dollar index, as the dollar index holds resistance and gold holds support. If you hear that in the background, that's the bell for the New York Stock Exchange coming online. Guys, have a great session. We will see you tomorrow morning, 8:30 Eastern, for another intraday session on the morrow. Have a great afternoon, guys. Cheers.